Welcome to our webinar. This is LedgerGurus webinar on sales tax compliance, why your business can't afford to ignore sales tax. Feel free to answer the initial poll. We'd love to know who you are as we are starting this webinar. A little bit of housekeeping before we get going. We want this to be interactive as possible. The way that we're going to do that is through the chat and the Q&A. So if you look at the bottom of your Zoom, you'll see there's two options. One is a chat where you can chat with us. The other and probably preferred method of asking questions is to use the Q&A. We have a number of our experts here with us, and we will answer the questions either live during the conversation, or if it's more of a one-off question, one of our experts will try and answer it there. So feel free to jump in there. I'm going to keep the poll open while we're going. Feel free to answer it if you could. Going on, let's do a little bit of introduction, Lauren.
Oh,
So I am Stephen Brown. I am actually the COO of LedgerGurus, but I will be moderating today's webinar. Today I have Lauren Maillard, who is over our services team and helped build and scale our sales tax team. We also have some sales tax experts that in the background, Valerie and Amanda, who you may see or hear from. They are leading our sales tax team currently. With that, let's talk about the agenda.
sorry.
Oh, we skipped it. So as an intro, we feel like right now is probably one of the most active sales tax, the most changes of sales tax that we've seen since 2018. So we're going to talk a little bit about what the catalyst of a lot of multi-state sales tax changes were, which is the overview of the Wayfair Act, some compliance expectations, some behaviors that we're seeing this year that are different that everyone should be aware of, and then some next steps that you can consider. With that, we'll go ahead and jump in. Lauren, take it away.
Yeah, well, let's start kind of at the very beginning. We're all here because of the Wayfair Act. And the Wayfair Act, that was a 2018 Supreme Court decision that allows this for the states to require online sellers to collect and remit sales tax. And previously, sellers only had the requirement if there was a physical presence. And the Wayfair Act has been adopted by the states over time. The states have legislated the requirements, and for most states, it was $100,000 in sales or 200 transactions. All of the states have now adopted the law. It took a couple of years. And during those years, reconciliations were very important because the state effective dates were actually being added every month, and not every channel was actually effectively collecting sales tax. And Missouri is the very last state to actually implement the Wayfair Act, and that came into effect January 2023. So it's definitely something that affects all of the states that have a sales tax. Let's see. So the current compliance expectations, initially there was leniency, but that initial leniency has faded. The states weren't questioning businesses that were registered or that were registering for sales tax. They were just really happy that sellers were actually coming and getting registered, collecting, and remitting sales tax. But we are a full 6 years in to this, and full compliance is being expected. The states are getting very serious about collecting sales tax, and they're looking for revenue, and so they're coming after sellers. And so, how are the states enforcing compliance? We've seen multiple things. The states are buying lists. They're working with sales channels. They have multi-state agreements where they're working together to collect information and share that information. We're seeing.
Let me drill
Oh,
down on some of these points,
uh-huh.
Lauren. So they're buying lists. So
Mm-hmm.
if you're not aware, you can go out and buy lists of businesses. They're easy to buy. Working with sales channels. Talk about what we know, like Amazon. What are they doing with, what do we know that they're doing with Amazon, for example?
They have contacts with Amazon. They will go in back and forth. It's not hard for a state that's working with Amazon to ask for information, and Amazon's going to help them out.
So they'll say, "Give me all your third-party sellers that have sold through you in my state." Is that the kind of
I don't
stuff?
know if that's the exact question, but yeah, pretty close
But
to it.
we do know that they are doing that kind of stuff with some of the
Hmm.
big marketplaces.
Yeah, they are. Um, and the most aggressive state that we're seeing is Illinois. And Illinois is focusing on the period from the Wayfair Act to when the seller is registered. And we've got multiple clients that are under audit, and that audit period is going all the way back to 2018. So it's kind of like they're done playing Mr. Nice Guy, and now, they're expecting everyone to play by the rules. So Illinois, that's one of the most aggressive states. We've got other states, and they're focusing on finding sellers that they think have crossed the nexus threshold. Washington's another aggressive state. Washington has sent surveys out to businesses that aren't registered in Washington. So they're finding sellers, and they're going out and sending these surveys. Washington, their penalties are 39%. And you also have to consider that they have their B&O tax. And so, that's another state that's really enforcing compliance.
I've got a question. I think I know the answer, but I just want to confirm. What about Shopify? Do we know if Shopify is providing any sort of information to states?
Um, I can't confirm it, but we're pretty sure about it.
I think the big
That
difference with Shopify and like a Walmart or an Amazon is they are not um, they are not the marketplace, but they're providing basically a marketplace solution.
Mhm.
That said, we know that Shopify facilitates the calculation and collection of sales tax. So if I
Yeah.
was a state, you probably would want to have a relationship with Shopify.
And, in the future, Shopify will probably become a marketplace. Like there's legislation that's being worked out, and it would make everyone's life easier if they were a marketplace. Right now, they're not. Um, but we'll see what happens there. Okay. Oh. And so we've got business activity questionnaires. And so these are the questionnaires that the states are starting to send out. This is what we're seeing from Illinois. This is what we're seeing from Washington. And the states are not content with simply collecting taxes and moving forward. They're really wanting to recoup funds. If we're thinking about where the economy is, who better for states to collect funds from? People who don't live in their states. So they're really going for those out of state sellers. Um, and we are seeing both registered and non-registered sellers receiving this. So, you could be out there, and they're gonna find you.
So we've got our next poll. We'd love participation on this, which is, have you received one of these questionnaires? They have different names in different states. We see Illinois doing this a lot. Um, there's other states that are doing it. Really curious, and we'll share the results once you have answered. Obviously, I think if you're not a brand or working in a brand, and from our first question, there's quite a diverse audience here that may skew the results some. But I'm going to let this questionnaire run for a minute or two and then share the results so we can see how many people have received an activity questionnaire. I listed Illinois, Washington, Texas, but feel free to, if you're getting one of these questionnaires, to answer yes if it's from another state. The big thing, and we have the kind of a sample of what this looks like. This is just page one, right? Um, these are fairly extensive, right? They are asking, like, what are some of the questions that we're seeing being asked, Lauren, beyond what we have here in the screenshot?
I that's about a question for Amanda, actually. Um, Amanda, do you want to? There we
Yeah,
go.
I can talk more about this. The questionnaires, they're really touching base on, it is very similar to what's being shown on the screenshot. They want to know if you have any physical presence there. They're asking you about past sales history to see if, if you don't have any physical presence, uh, do you have economic nexus there? And they are asking for 3 to 4 years of information when you fill these out.
Okay, so they're pretty intensive. The states are trying to figure out if there's some money that you should have given them. What is the what happens? What are we seeing once we reply to those questionnaires? And I might need to lean on you, Amanda.
That's going to be, yeah.
What do we see happening when you reply to these questionnaires? What are some of the outcomes once replying?
Yeah, so the state's going to go through the information, and if they see that, there is some type of presence in the state, then they're going to start an audit, and they're going to usually take the sample size of what they've asked for those 3 years and look at it. Um, and then sometimes they'll capture a larger uh, more years, take in more years than what they've asked for the last 3 years. But they're, you go into an audit and they want you to, if you haven't registered, you're going to need to register. And um, yeah,
And
This
they
is
are,
this is a good insight from Jim. Jim said Missouri didn't send a questionnaire. They just sent an
mm,
amount due based on sales data they received from marketplaces. So here's your bill, you know. Wow.
we've heard of that before. We've had a couple of clients where that's happened to also. So,
Um,
you've got,
one more question, Lauren, before we move
uh-huh.
on, and then I'm going to share the results. So it looks like from our results, we had about a three-fourths of you that participated. We're sad for those who didn't. Um, Fairly low. Some of this, again, this is do not consider this to be a statistically uh, significant sample, but it just from this group of
Mhm.
31 people who responded, we had about 6% that have seen these. Another question is what's our definition of a marketplace and SaaS in terms of sales tax? I'm going to try and take this. So a marketplace would be something like an Amazon, a Walmart.com, a Costco, anybody where you are selling your products through their market versus uh I'm not quite sure, Akram, by SaaS, but when I think about SaaS, I would think like a tool like Shopify, WooCommerce, BigCommerce, where you are have your own store and you're using the SaaS software to create your own little market to the customer. In either
Mhm.
case, there is sales tax liability, and there's different ways that sales tax are handled in marketplaces. Some cases, the marketplaces become what's known as a marketplace facilitator, where they are facilitating the collection of sales tax, but they are only looking at the sales tax in their marketplace. And if you're selling in different places, you have to consider it the whole as a seller, and you don't want to rely on them entirely because they might screw you up.
Mm.
Um,
Yeah,
other,
you're still responsible, even though they're remitting it to the state, you're still responsible if they screw up. So we've seen Washington go after an Amazon seller because of a mistake Amazon had actually made.
and here's another good question. I think we're going to get a little bit into Nexus, but do you have to use Amazon and Walmart sales to determine Nexus if you are
Mm.
also using Shopify?
Yeah, that's a really good question. And there are, I think, 5 or 6 states where you do. And that's where determining nexus, and we'll talk about it in just a minute, determining nexus can be really complicated because depending on the state will take into account gross sales, net sales, marketplace facilitators for determining if you've hit their sales threshold. And so, that's where you're going to want our expertise in helping you to do a nexus analysis.
All right, let's talk about next steps when you get one of these yucky surveys.
So there's really two big, broad steps that you can take in dealing with sales tax. When you have one of these questionnaires coming up, where you're just really, really feeling like you need to get compliant. You know, first option, register with or without back filings. And so what that really means is that you're putting an effective date on for the past, and then you're responsible to pay out of pocket for all of that sales tax that you didn't collect. So you're telling the state, hey, 2 years ago, I had the obligation, I had Nexus, I was supposed to, and they're going to give you a filing frequency, and you're going to have to go back and do all of those back filings and make all of those sales tax payments. So you're out of pocket. And the second option is to do a VDA. So that's a voluntary disclosure agreement. And we'll talk about that in just a second.
I have a
So,
really good question around
uh-huh.
this that I think everybody should hear. Mike and Valerie's typing an answer, but I want to bring this up as well. Illinois is auditing us. They've asked for state by state sales data for our entire business. So they're not just asking for what's going on in Illinois, they're asking for all states. The reason is they want to make sure our federal tax return of total sales adds up to our total sales. It does not seem right for for them to request sales for all 50 states. Insights on this. We've had this conversation internally as well because we agree, Mike, this does not feel right. So experts, they're asking for more data than their own state. What is the kind of the thinking that we've had around this approach and what we're hearing from
Yeah.
other experts on this?
It
Yes.
starts.
Oh, go
Oh,
ahead.
okay. I'll take a stab at it, Valerie, and then
Sure.
you can chime in here. It starts to get tricky because we're kind of tottering on legal advice, and there really hasn't been much precedence. Now, what we do know is that there are regional multi-state agreements where the states are coming together and say, hey, you do this, you find this out, we're going to share information. And so we have had clients who have come. There's either they're going through an audit or there's a questionnaire that comes to them. The state's asking for all of this information from the other states. And, at this moment, we're telling clients to do what they feel the most comfortable with because, you can give the state that information, and it's very possible that they're going to turn around and give it to another state that you have nexus in. And that's not something that we really wanted to worry about unless that's part of your sales tax strategy. And so we are actually reaching out and talking to other experts and to what they're seeing and kind of what the response is back from the state if we're not giving that information. We have had clients who have not given that information, but I think it's too soon to tell what the repercussions are of them deciding not to give that information to the state. Valerie, what would you add to that?
Yeah, no, that's exactly it. So we've been doing some research, and based on the multi-state tax compliance agency, they are sharing information. And what we've seen is that it'll trigger a questionnaire from one of those other states. But Mike, I understand your concern, and we get this question over and over. What right does Illinois really have to ask on behalf of the other states? It is unfortunate.
Well, and it's, even if there is an agreement, I'd like to actually understand how legally enforceable it is. So you have the question of, is it legally enforceable? But then there's also kind of the practical part of, are the states going to get nasty because you didn't help them out? And I think that's a real possibility, but we just haven't seen the repercussions yet.
Yeah.
Now we've got some
And-
questions coming in fast and furious. A lot of these we are going to be answering in upcoming content. So Tiffany's like, what is Nexus? We're going to talk about what Nexus is. So hold tight, Tiffany. We'll be talking about that. And then Juhi about city and state taxes. We'll probably talk about the dynamics of jurisdictions a little bit, right, Lauren?
Yeah, we can.
So
We don't hit on
get
that, but we
through
might have time.
the whole tight, Tiffany and Juhi, and we'll get into the your questions. Let's get through this on how to handle these situations.
So option one, right? you want to go ahead and you can make the choice to register and move forward. So you could go ahead and say, hey, I need to get compliant. It's on my to-do list. My business is doing well. And you could go ahead and you could get registered and you could put, August 22nd and just go ahead. But, in a lot of cases, you're going to need to make the decision to register and go back and pay taxes. And this can be a really good decision if your exposure is minimal. And so to kind of just remind you guys, exposure is the amount of sales tax that you were supposed to collect, plus penalties and interest. Penalties can be a late penalty, it can be a late payment penalty. And like we said with Washington, we're seeing up to 39%. We're seeing 4% compounded monthly. I mean, we're seeing amounts that are just absolutely huge and can really break a small business owner. It's really, really unfortunate when we see what the states can do when it comes to penalties. And so, I just remember that sometimes the best resolution is to register and pay back taxes. And this would be the case if your exposure is really small. So if you're a newer business owner or your sales aren't too high, this is a really good option. Go ahead and get registered, put that effective date back a couple of, however far you need to, and get compliant. And, you would want to do this because then the risk is removed and you're compliant. So if you had Nexus, and I'll just answer it just right here. Nexus is an obligation to collect and remit sales tax. And that obligation is met in two different ways. It can be by physical presence, and that's what most people are familiar with. So if you have a physical store, inventory, employees, or even, in some cases, if your inventory passes through a state, then you have an obligation to collect and remit sales tax to that state. So that is physical nexus. And economic nexus is the obligation to collect and remit sales tax because there's a lot of activity that's going in and out of that state. Well, actually going into that state, sorry. And so that is what Wayfair changed. So if you remember, back in the early 2000s, people would buy so much online because you got a 6% discount because the online retailers weren't collecting sales tax. And that's where, online sales exploded and the states are really feeling the hit of the sales tax not coming in because there's not as much sales happening in brick and mortar stores. So, getting back to registering and paying your back taxes, you have the obligation when you hit Nexus, you have an obligation, and you kind of signify when you feel like you had that Nexus to the states by the date that you register for. So if you go ahead and register today, you're saying, hey, state, I have Nexus on this day going forward. I'm going to be your agent. I'm going to collect sales tax. I'm going to remit sales tax to you. If you register and you say, hey, I had Nexus a couple of years ago, the state's going to come back and say, okay, well, I want my sales tax. And so it might not make sense. And we've got another option for you. But if if you had Nexus a month or two ago, I'd say, hey, go ahead, get your effective date, pay the sales tax that you were supposed to collect out of pocket, and then forget about it. It's crossed off your to-do list. You don't have to worry about sales tax, and you don't have the risk that that state is going to come back and charge you penalties and interest, because those penalties and interest will just keep going and going and going. There's no limit right now for how far back they can go. If you had physical nexus and if you had economic nexus, they can go back till 2018. So sorry, I think I went a little in depth there.
Let's go to the next slide, because I think there's some really good points that you're going to cover. Because there's a challenge, right? One of the challenges is, and this is on the second bullet, you go in, you owe $50 of sales tax to a state. Should I register? This is a big question that we get all the time. So Lauren, take us through the considerations of when to register and pay.
So when to register, sales tax compliance is a business decision. Because if you are a smaller e-commerce seller, so I'm going to say between $1 and $5 million, you could very well have Nexus in every state. But it could cost you quite a bit to actually be perfectly compliant. And so, once again, that means you'd be registered and remitting sales tax, potentially monthly in each of those states. And so there's a cost for getting those filings done, for calculating the sales tax. And so you have to weigh the decision of how much does it cost to be compliant and how much am I actually collecting? And so here's the example that I use quite a bit. If you are selling 200 pencils in 200 transactions into a state, the state could come back and say, hey, you have Nexus, you're supposed to register and remit sales tax. Well, sales tax on a pencil, we're talking about pennies of sales tax, where to get that sales tax return actually filed to the state could cost you $100. So that's where you have to make a business decision and actually look at what your situation is. And that's where with sales tax, you're going to want to talk to an expert who really understands, what the penalties are going to be, which states are aggressive, and kind of help you come to a decision. We never make the decision for our clients where they register. We always say, here's exposure, here are things that we recommend. You go ahead and make the business decision on where to register.
Because to that point, the penalties interest on a really low balance could be less than the cost of filing, doing these returns over a long period of time. So there's a trade-off you kind of have. Now, the one thing I'll put in here, then I don't think we have it in our slides because it happens sometimes. Let me say this, I'm going to say this at least 3 times. Do not collect sales tax if you're not registered in a state. Do not collect sales tax if you're registered in a state. Do not collect sales tax if you're not registered in a state.
Stephen, they need to understand what that means. So what that means is, do not go into Shopify and toggle on that you want to collect sales tax everywhere. Do not do that. You register first. And then when you have your sales tax registration, which is your license, right? Then go in and turn it on. Because what happens if you turn it on everywhere? If you have collected sales tax, you must remit that to the state. And so we have had clients who have turned it on for, 45 jurisdictions. They did not have Nexus in more than, 40 than one. So you've got, 44 different states where they're collecting and they didn't have to. And now they've got thousands of dollars worth of compliance to either remit the sales tax, or you do have the option of returning it to the buyers, but that can be very, very complicated and very time consuming. So that's the biggest mistake that we are seeing at LedgerGurus are people who have turned on the tax settings everywhere and now owe hundreds of thousands of dollars, and they're going to have to pay sales tax everywhere when they actually didn't have the obligation. It can get just so incredibly complicated. So thanks, Stephen, for bringing that up.
All right, let's keep plowing. There's so many Nexus questions. Let's get to a point where we can talk about Nexus.
Okay.
So hang tight, everybody. We're gonna talk about a lot of your questions that are related to Nexus here in a bit.
Okay, so the other option, right, is you can do a voluntary disclosure agreement. And so a voluntary disclosure agreement is offered by states as a program where businesses voluntarily come forward and they say, hey, I had Nexus, I want to get compliant. And with these programs, there are reduced penalties, there's a limited look back period. And most interestingly is there is confidentiality that happens. So what happens with a VDA is you go to a third party and they will actually be your agent with the state, go to the state and say, hey, I've got a business, they had Nexus, here are all of the transactions, what can we do? What kind of a payment plan can we work out? How can we reduce the penalties? And then you can make a decision of whether or not you want to go ahead and do a VDA. So, VDAs, They'll reduce your past exposure. VDA should be considered everywhere a business has physical nexus. This is a really, really important point. If you had a brick and mortar store and you have not been collecting sales tax, you really should think about doing a VDA because there's no limitation. Economic nexus doesn't predate the Wayfair decision. So we know that if you had economic nexus, it's not going to go past 2018. And what we're seeing is the states are really focusing on 2021 and 2022. So yeah, a VDA can be a very valuable tool in becoming compliant. Let's see. Yeah, when to consider a VDA if your sales tax exposure is high. So once again, sales tax exposure, what you should have collected, plus penalties, plus your interest. And you're going to want to really consider it if the sales tax penalty is more than the professional fees charged for the VDA. So in explaining this, the states don't waive interest. That's something that you're going to have to pay, but they will waive penalties. And so what we're seeing other firms or other organizations charge for a VDA, it can range between about $5,000 to $10,000. So if your penalty is less than that, go ahead, pay the penalty. And I wouldn't go ahead and do a VDA. And then the third point here, if your business has collected sales tax in a state but has not remitted that, and that just goes back to if you collect sales tax, you have a legal obligation to remit it. So there's kind of no option. There's not a good option of not registering, right? You need to get registered. You need to get compliant one way or another. Here are some other points to consider when you're thinking about sales tax. And that, the first point here is review your nexus footprint. We recommend that a business that is growing rapidly really review their, oh, shoot. Sorry, I don't know how that happened. Oh, here we go. Okay. Okay, here we go. If a business is really growing quickly, review your nexus every 3 months if it's very quickly. For most businesses, it can be every year and a half, or 2 years, depending if your sales are kind of keeping steady. Or if you notice, if you're noticing that you're selling quite a bit into one state, then it might be interesting to do a nexus analysis for just that state.
Lauren, can we stop here for a second? I know we talked about this. Kelly's gonna hate it, but there's so many nexus questions that I whipped together a really ugly nexus slide. And I just want to talk about nexus because I see a ton of questions. What is nexus? So I'm just going to share my really ugly slide so that we can get on the same page. Nexus is when you have some sort of a presence in a location. And the big thing about the Wayfair was before Wayfair in 2018, it was usually based on some sort of a physical presence. Either you had an office in there, you had product that was being warehoused in that state, you had employees. This is a big thing with remote work. If you have an employee in a state, you may have nexus. And so before 2018 and the Supreme Court decision for Wayfair, that was primarily how nexus was happening. And the warehousing was starting to cause a lot of problems, especially if you used like Amazon. Your inventory with FBA could create a lot more presence than you thought it was. It wasn't just your 3PL. With the Wayfair decision, they introduced this concept of economic nexus. And it's not the same in every state. We've got a really great download. Kelly can find it and put it in the chat, but there's a really great download that we talk about how economic nexus looks at, or maybe it's a blog article. I don't know, Kelly, you could find it. But they basically set some thresholds, and states started creating economic thresholds, either by the number of orders or by the amount of sales in a time period. And that changed everything and made sales tax a nightmare for all of us. So understanding nexus is a really important thing. And so I've got a bunch of questions for you, Lauren, while we're looking at my ugly slide.
Yeah.
And while I'm doing that, I'm also going to launch a poll to explain. When's the last time you did a study? So one of them is around, hey, Meta app collects city sales tax as well as state sales tax. Are states forcing the sellers to pay sales tax for cities too? I'll try and take this one. The short
Mhm.
answer is the sales tax is usually calculated at multiple levels, right? There's at the state level, the city level, sometimes at the
Mhm.
county level, sometimes like Lauren, what other kind of weird jurisdictions are there?
In California at the district level. And what's crazy with that is that in California, there's different nexus requirements for the district level and for the city level. So it can become really complicated there.
And that all kind of rolls up into a rate based on the address you're being sold to. Now the states
So
act as the agent for all of those jurisdictions. Am I correct, Lauren?
that is correct in most cases. We have home ruled jurisdictions. Colorado is, a state that allows us where you have small jurisdictions state where they are actually administering sales tax on their own. So they actually have their own sales tax return that you have to fill out and remit to them. So it can become very complicated. Most states, that is not an issue. It is administered at the state level.
Sucks. That's all I can say. This whole
Yes.
topic sucks. Okay, some other Nexus related questions. A business has an employee in the state but are not selling anything. Do they still need to register for sales tax and file 0 every month? Amanda looks like answering this, but let's say you have a Nexus in that state, but you don't have any economic sales going on.
If you,
Maybe
so
maybe Amanda could jump in
that's
because she's
that's where it's a business decision.
mhm.
Is Amanda
Yeah.
responding there?
So any physical presence, it is a business decision. I would recommend registering and filing. It's going to be a $0 return,
Mhm.
but you do have a physical presence in that state. So
And I'll give an example for Texas. Texas off the bat, if you don't file that $0 return, if you file it a day late, you're hit with a $50 penalty, even though you don't owe anything. So just the fact that you didn't file that return and you should have. And, also the states are going to find you because you have an employee there. They're registered with the state, right? You're paying employment taxes. So the state will find you.
Yeah, so stupid. That's how I describe it. Um, if sales tax is registered in one state and selling on, okay, so if you're registered in one state, but you're selling on Amazon, which hits all the states. Um, okay, I'm having a hard time a little bit. So let's say you're only registered in one state, but Amazon is collecting and remitting in multiple states.
Mhm.
What do I
And
do?
so if you are, so I can give the broad advice, right? And this is where you're going to want to have a conversation because what you're selling, and how much you're selling is going to matter. If you're an Amazon only seller, then you're not going to have, let's say you're Amazon only seller, they're collecting all of your sales tax, but there are those states where they're going to say, if it's being collected on a marketplace facilitator, so on Amazon, then you don't need to consider it when you're deciding if you have Nexus. But there are those handful of states where they're like, yeah, you still have Nexus. And then the question goes to, is it a state like Texas where you should be doing a $0 return? So it's very, very possible if you're selling on Amazon, right, that you don't owe anything to the states. If you're only selling on Amazon, you're not gonna be responsible for collecting and remitting, but you're still actually responsible to file a return.
More yuck. Okay.
Yeah.
A couple other what about a print-on-demand company? Would that how would that affect Nexus? So somebody's using something to do a print-on-demand.
Yeah, that becomes really complicated. What that really is it's a form of drop shipping. And with drop shipping, you have to determine where you have nexus, right? And for the seller, right? It's going to be the nexus is determined not only, okay, this is the very broad guideline, and I'll give the broad guideline, and then I think, reach out and ask other questions. But the broad guideline is the seller and the drop shipper are both creating nexus based on the number of transactions into a state, and they're counted individually. So the same transaction will create nexus, or the same transaction can create nexus for both the drop shipper and the seller. And so you have to determine what the nexus is for the seller. And in that comes the very big complication of certificates of exemption. Because if you have nexus, you have an obligation to collect sales tax or to collect a exemption certificate. And so I kind of want to leave it at that, because we can go down really a black hole of questions with that.
Okay, some more Nexus questions. If multiple owners, is that the same as an employee? Like you have multiple owners in different states?
It is.
Okay, so that's an easy one. Yes, you have multiple Nexus. Company turned on sales tax for one state. They haven't launched the store and they haven't registered with the state. What should they do? Should we register?
Quickly register. Quickly register, and you're going to put the effective date for the date that you started collecting.
That's an easy one. So yeah, make sure you register before you launch your store. You'll be good. We have an online store in Florida and we buy from a warehouse in Florida. We haven't gone live yet. When we do start selling out of state, how do we determine how much sales tax to collect? That's a whole webinar unto itself. Every state has its rules by thresholds. So if you're getting started, and everything's in one place, it's really easy. Register, collect in that state because you have Nexus. You're gonna what's the general rule of thumb that we see?
Yeah. So is the question what the rate is that they should be collecting at?
When should they start collecting for out-of-state sales? And that's kind of a state by state basis, but the general rule of thumb is
if you're getting over $100,000 of sales into a state, you've probably hit nexus. That's the very broad, and it could be depending on what your individual transaction amounts are. So if you're selling, once again, going back to the pencil example, if you're selling lots of little pencils, you could potentially hit nexus very, very quickly, but then you wouldn't want to actually get registered because you're only owing penalties, and it wouldn't make sense in that case. But another question that I kind of heard with that is, how do you determine the rate? And that's where, if you're on Shopify will calculate rates for you. So you don't have to actually determine that. There are 5,700 different sales tax rates that correspond with different jurisdictions. So not even the type of taxability. So there can be, different sales tax rate depending if it's a food product or if it's clothing or something. There are 5,700 different sales tax jurisdictions. So it can be very, very complicated. And that's where you're going to have a sales tax calculation engine, and Shopify can be that for you.
All right, we've got a lot of questions still. What I'm going to do, experts, Amanda, Valerie, if you could jump in on some of these questions. Let's kind of I'll go back to you, Lauren, and if you we'll keep going and then we'll try and hit some of these more questions. So we want to kind of finish out kind of this core content because they're coming in fast and furious.
Okay, you've got
Oh, hold on a sec.
Oh, okay.
There we go. And thank you for answering our poll. So it looks like a nexus analysis is where you kind of determine where you have liability, and it looks like we have quite a broad range of people when they've done their last analysis.
So just kind of finishing off the other things that you need to consider. You need to consider if what you're selling is taxable. If you need to collect exemption certificates or not, if you need to collect a use tax. Use tax is if you have a product that you're selling and you decided to consume it or to give it as a like a promotion to an influencer or something, you're responsible for actually paying tax on that. And so you pay that to your home state. So that's called use tax, because the state wants whoever is the final user of a product, or the final user of a product, to have to pay the sales tax. Home rule jurisdictions, that's like Colorado, and then preparing for sales tax holiday. If you use Shopify will actually adjust rates for you when it comes to sales tax holidays. And those are usually, like back to school holidays, where for a day, backpacks aren't taxable.
Now, pause here for a second. I'm going to launch our last poll, and I'm just going to leave it open. What Lauren just put out, you're like, what is that? We could go deeper on that. So if there's specific topics you would love us to do future webinars on, or other types of content, would love your feedback. I'm just going to leave that poll open. You can answer it as you see appropriate. Let's talk about something else that's new, that's starting to get infectious.
This is, yeah, definitely. So this is, it's just kind of terrible. So it's the retail delivery fee. So this is not a tax, but it is, well, it's not a sales tax. It is a tax that the
You're
states
talking
are
like
imposing.
a politician right now, Lauren.
Right, I am.
Not a tax.
The states want their money. Basically, it comes down to that. And so they're taxing every transaction that's coming into their state. And Colorado was the first one. It was 29 cents for every transaction that's going into a state and that's being delivered, you owe the state 29 cents. And so that's something that you're having to collect and remit to the state. Minnesota is the second one, and it's 50 cents on retail deliveries over $100. And there's a couple of small seller exemptions. Retail delivery fees are something that we're going to see just more and more of. It's 2 states now. It's going to really reach out, and quite a few more states are going to be following.
Yeah, so we expect that to expand, that terrible trend of,
yeah, it's
they're
kind of
finding-
off what.
And Lauren said it right. They're calling, it's not a tax, it's a fee. Well, it's all a tax, right? But
It is.
They're finding new ways to tax us and not calling it taxes.
Yeah, and Stephen, I just want to say, like, what is really horrible about this is that it affects the small business owner, the small e-commerce seller, at a much higher level than when we're looking at big e-commerce sellers. Just when you're looking at the compliance cost of collecting and filing returns, it's really unfair. Like, quite honestly, the states should take that into account at a higher level than they are. So how can LedgerGurus help? I can say, kind of toot our own horn, we are really, really good at helping individuals and companies with understanding their nexus and where they are. And there's a couple of different ways that we can do that. We can do a 3-year nexus analysis. We can do a 1-year nexus analysis, or we could do a single state nexus analysis. And with each of these different nexus analysis, we provide what on here it said an exposure review. What that is it really is a consulting call where we will get on the phone with you, talk through every state, what your exposure is, what your penalties are, what your interests are, and kind of help you come up with a plan to becoming compliant, right? When it comes to sales tax, you want to really be methodical and kind of rational and thinking about your business as a whole before just jumping in, registering everywhere, collecting sales tax everywhere. And so you'll have a sales tax expert who can help guide you through what you should kind of do and help you not make decisions for you, but give you some good guidelines and some good advice. So we're able to do that. Yeah, it's something. When it comes to sales tax, what I see quite a bit is there's kind of two camps of people that come to LedgerGurus. People who are really on top of the ball and they want to get compliant, kind of ahead of time. And then we have people who come because they've buried their head in the sand and they've kind of just let sales tax compliance, they've ignored it for so long that now it's a really, really big issue. And we're having to do really big cleanups for them. What I recommend is do a nexus analysis either on your own, reach out to us, talk to a sales tax expert, and then just come up with kind of a really easy plan on how to go forward. Make the decision to review your nexus regularly, look at your taxability regularly. If you do that, then you're not going to have penalties, you're not going to have interest, and you're not going to have this huge weight on your shoulders of risk and penalties and interest that could really, bring your company to its knees if a state is to come after you.
Okay,
Steven, do you want to do more questions?
Yeah, let's do some more questions.
Okay.
I'm really going to hit the questions that are going to impact a lot of you, and I'll ask experts to try and hit the questions that are really one-off. Retail delivery fees. Is Shopify automatically collecting those fees for us?
Amanda, why don't you talk about setting up the retail delivery fees? Because we are seeing some difficulties with actually calculating it and remitting it.
Yeah, so this actually is going to depend on your tax engine. So each tax engine is going to have its own specific way of setting that up to collect for you. If you're using AvaTax, you need to go in and set up that tax code. If it's Shopify, it's under your tax settings and under advanced settings. So it's really just going to depend on what tax engine you're using.
So if you're registered in Colorado, it doesn't turn on automatically if you have the sales tax turned on in Shopify.
No.
Okay.
But it can, there's a couple related questions. It can calculate the fees in Shopify. Your tax engines typically will.
Yes. Yep. Yeah, it'll calculate the fee. But yeah, it's really just going to determine what steps you need to take based off the tax engine itself.
And then one more on retail delivery fees. Amazon. Is Amazon collecting and remitting the retail delivery fee for you?
Amanda, I don't know the answer to that.
Amazon is, I'll be honest, I'm not positive on that one.
Jim,
Okay.
we'll get back to you on that one.
Yeah.
You want to what's the best way?
They should be, but yeah.
We'll double. We believe we can, but we want to make sure we're giving you good information. What's the best way to reach out to us? contact@ledgergurus.com. Kelly? I'm going to say
Yes, on the next slide,
Yeah.
I've got
okay.
the link.
So we'll go to the next slide. You can reach out to us in this next slide if you need. There's a contact, and you could shoot us that question.
Okay.
It looks like they do, and I'm going to drop an article in the chat for the participants.
Okay. Yeah. So
Thanks, Valerie.
Valerie's going to drop an article. States that are aggressive versus less aggressive. And penalties, which ones have the most penalties? Do we have anything like that lists the ones that are the most aggressive?
That is something that we'll go over when we're doing our consulting call. I think we might have an article out that lists what we're seeing as the 10 most aggressive states. Kelly, do you know if we have that blog article active?
I'll go look for it.
We're going to try and find that for you, Mike. I think we have some of that information that we can drop in the chat. if you'll stick
And
around.
penalties and interest, it really varies the gamut from state to state. I would say that is where the most differentiation is between the states and how they're dealing with sales tax is the penalties and interest. It could be, a late filing penalty and late payment penalty, interest. I mean, it ranges the gamut from, $5 to, 39%.
Do you have a recommendation for sellers that sell both retail and wholesale? Since some states seem to provide sales and use tax exemptions for wholesalers, would it be worth considering setting up the wholesale operation as a separate entity that, this is a hard one. Amanda's going to answer this one. I think this is a really complex one. So, I don't know if that's going to apply to everyone around wholesale retail. So Amanda's jumping on that one. Exemption certificates. Let's talk about exemption certificates. And this is kind of related. Do you wait to collect these until you've reached the threshold in states you don't have nexus, or do you need to collect these no matter what? When should I get an exemption certificate? Great question.
So it depends. The obligation to collect them happens when you hit nexus, right? So you actually do have to register with the state. Sometimes when you register for sales tax, you're also registering to be able to get, if you have nexus, you have the obligation to collect sales tax or to collect the exemption certificates. I think that's the best way to say it.
Okay, and I just dropped in the chat an article around nexus. Let me just see. So we have a lot of content. If you are not watching our blog, you should register for our newsletter. That is where you probably got this from an email list, but if you're for whatever reason not subscribed to our newsletter, highly recommend it. We will publish news of our own as well as other good news that we feel like people should be aware of.
Stephen, I kind of want to, there's one thing that isn't on here is we do hourly consulting calls. So if you want to reach out and get, just talk for an hour with one of our sales tax experts, they can really guide you and reassure you that you are doing things right or help you, determine what the next best steps are for you.
There's somebody that asked for the Nexus threshold list. Is that,
that's readily available. That's something that we would go over with you during a consulting call. But otherwise, we don't have a blog on that, but you can easily Google it.
We actually have a download that has all of them uploaded. So I'll put that link in the chat as well, Stephen.
Kelly, when was the last time that was updated?
About 2 months ago.
Oh, okay. So it's recent.
Yep.
What I would also say
perfect.
with all of our content is we generally try and keep it up to date on the website, but the most authoritative is going to be sitting down with one of our experts. So use the stuff on the website or anybody else's websites with just some awareness that stuff is constantly changing. We don't update our content every single week. We probably could if we wanted to. We got some more questions. What kind of form should I use to collect the sales tax exemption certificate? Is it a generic form? Is it a state specific form? What is that?
It's a state specific form, but there are different states who accept the same form.
Okay.
So Amanda, do you want to jump in and give a little bit more clarity on that? Is she?
My apologies, Lauren. I'm trying to get to these questions on the
sorry.
chat. So
what the different exemption forms that are accepted by states? Most states, it's been a while since I've looked at it. There's states that will take their own form, and there's states that will take the multi-state agreement?
yeah, so it's going to depend on the state. Some states will accept it's called the SST form or the MTC form. Not all states are on those forms, so you've got to be careful. But each state does have their own requirements. And just because they may fall on the MTC form, there's certain guidelines that you have to follow in order to use that form. So if you have more questions about resale certificates and what is accepted, a consulting call would be a great opportunity to sit down and we could talk over what that looks like and what states will accept what.
Thanks, Amanda.
Okay, one more question, and then I think we'll call it a wrap. If you have one transaction that is over Nexus and do not plan to get any others, so like you've crossed Nexus, but then you don't want to do it anymore. Can you register then get out of that state, or do you have to continue to file $0 returns for a length of time?
It actually depends on the state. So there are some states that will allow you to deregister immediately, and there's some where they make you wait a few months or a few years to prove that you don't have other transactions into the state. So state by state.
All right, we're at the top of the hour. I know there's a couple more questions. I'd encourage you guys, if you want really deep technical discussions, take us up on the consulting call. It's worth your time because this stuff is hard, and I wouldn't, as much as we're trying to be authoritative here, it's really hard. The details of your business can be very specific. Thank you for all the feedback and the participation. We're going to look at some of that feedback on the last poll for future webinars. We love the engagement. Hopefully this has been beneficial to you. We look forward to engaging with you wherever we are, whether it's YouTube, blogs, webinar, newsletter. Stay in touch. Thank you.
Thanks, Stephen.